The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to take a look here at the German DAX. That's quite heavily traded over there across the pond. You'll notice the head and shoulders pattern that's depicted here by the two triangles. If you notice, the left shoulder is just a tiny bit higher than the right shoulder. That's the ideal situation. It also could be equal, but if the right shoulder is higher than the left shoulder, it can still be a head and shoulders pattern, but it is a stronger pattern, and you have to be a little careful. This one happens to be a weaker one, and as you can see, you come down and you go down to your target there at 95, and the easy way to figure out that target is you go from the high of your head up there. You can see there was around 10,075. You go down to the first retracement down there at the 1.27 expansion. Okay, and all you do, folks, it's going to be hard to believe, just flip it upside down, and there's your low, 9,500. That's also called AB equals CD. Now, there's another thing that's important about the head and shoulders pattern in order to define it perfectly. And the people at the, for Andrew Lowe that wrote the book, The Non-Random Walk Down Wall Street, where he talked about the markets are chaotic, but within that chaos are non-random patterns that repeat and are predictable within limits. That book was written in 2001, I believe. If you'll look at this in one more context, and that is, if you see a pattern like this, it is certainly tradable because it is one of the main patterns that he looked at. He looked at 800,000 different types of different types of patterns over a 32-year period, and as he said in his book, that not only were they predictive, but they were also repeated over and over again, and that proved that the market was not just chaotic, but there's these non-random patterns that are in there, and so that's what we're trying to look at. So that's what we're watching here. We're going to look at a couple others here. One of them from crude oil perspective, because Linda Ratzke just came up with a tweet about crude oil, and we're going to take a look at that in just a little bit. Now, the next one we want to look at here is the FTSE. We'll get it up and take a quick look at it. By the way, folks, if you have any questions, you can call me 877-927-6648. And then we'll be taking your questions as we come up. Right now, the lines are just absolutely full. You're just not able to get in, but maybe a little bit later. Now, in this chart, it's also a 15-minute chart. You can see the three drive to a top pattern that we had up there at 98.50. Market came down to the 50% level, went up to the 78% level. Made a nice little butterfly, Gartley this morning, right near the low and now we're in the midst of rallying a little bit. So here another one is just following just nicely. The trouble is they don't work all the time, but when they do work, they certainly are tradable. We want to pay close attention to that. All right, let's get to what Linda Ratzke was talking about in her Twitter. And I don't do any Twitters. I'm not a Twitty or a Twittor. Hold on a second here. We'll get this up here and bring it up here. All right, as you can see here, the little dotted lines there, right near the bottom, you see drive 1, drive 2, drive 3. She doesn't mark them like that, but that's what she's looking at. Now, I agree that we could be very, very close to a 3-drive bottom in the in that pattern, but let's look at it, blow it up, and look at it from a perspective of looking at crude oil the way we look at things. Now, we're far from being perfect, of course, but here's crude oil since the March the 9th. Let's just get this up here. That's when the day when the market broke down badly from that 42 level. Let's get this up here. you'll notice that that March 9th level would have been that would have been drive one. Okay, the reason why it's drive one is you came down and then you had a really nice 3-day correction. Okay, went right up to point A. That's point A, and then you see the market came down to point B. Okay, right there at the on the 17th of March, St. Patrick's Day. And what do? We rallied up 3 days to point B, and that gives us an A, B, C, D that brings us down to about $15 a barrel. And right now we're trading around $20.60. So I still think we're going to go lower. Now, there is a possibility here because of the fact that the cycles that are there, it's a 7-day cycle. And if you count the number of days down from A to B and the number of days down from C to D, it should have bottomed 2 days ago on the 30th. And so that could be a bottom. Now, the $64 question is, if it doesn't stop there, if it gets below $20 again, I think it's $19.20 or whatever it is, that'll tell us that we're heading down to that somewhere between $14 and $12. So that's what I'm looking. I am not sure, and I don't trust that because the symmetry is not correct. And this lower low should have been much, much lower than the others. That doesn't mean it's not a major low in here, but it does mean that it looks like we're looking at it. Okay, Dennis is saying it looks like more ominous this week. Dennis, I tell you, I'm just looking at charts, pal, and they do look ominous. And the reason why they're looking ominous is because of one particular chart that we talked about here for the past week or so, and that is this one that we're going to show you right now. And that is the cash S&P 500. Folks, look what's happened over the last 4 days of trading. Okay, look at this. You've been up here at this area of 263 and change for quite a while. Yesterday, we made a higher high than we made last Thursday, okay, when we had that monster day, one of the biggest days ever. We made a higher high by 30 cents. 0.30. Now, this 0.382 number that you're looking here, this is accurate to the thousandth decimal point, 0.003. That's very, very accurate. And we have to pay attention to that because that is one of the Fibonacci sequence numbers. And when they hit so accurately, it really makes it look very interesting. Now, if that ABCD, let's just do the work ourselves here and defy human nature. We know that we have an ABCD pattern, okay? So if we have an A at 340, okay, you take A plus B, 340 and 220, that takes you to 560, okay? So you have 560, you add A and B together, and then you subtract C. So you have 560, and we'll say C is 263, so that's 7. 669 is, whoa. Wow, we're going, whoa, that can't be right. 560 and 260. I did something wrong. Oh, I did the formula wrong. It's you add 215 plus 263, and that gives you 478. And you take 478, and then you add minus 478 minus 340. Wow, we're heading to 150. That's what it looks like. Wow, if that's correct, that's a big drop. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted a thing. I think it's from Barton. I think it's Byron Ween and one of the other guys from BlackRock were on here the other day. They posted something on the internet early in January, and the 10 surprises of 2020, what they could be. Well, I went through all 10, and all 10 of them have been wrong. The reason why I'm posting that, folks, men are often wrong. Markets are never wrong. I mean, what we've had happen is a black swan event. I don't think there's any question that anybody would argue that that's not what's happened to us. And the fact that the fear is coming out there so much, it's really, it's really incredible. Now, there is a good thing about this, and that is, first of all, we're going to probably have more babies coming out here. Not at our nursing home, of course, but there'll be more babies being born. Maybe the family unit will get closer together. The fact that they're having supper together for the first time, and the fact that you're going to be able to communicate with your loved ones a little better. Hopefully that'll help. And there's a few other things, of course, that we good. You're not going to be spending a whole lot of money because you don't have money to spend. You're not eating out. I do try to support the the restaurants that have outgoing food. We have a thing here in Tucson that you can buy lunches and dinners for the emergency responders, and then they give you a discount. So if you get a chance to do something like that, that's always pretty good. So try to do our part, and we'll get through this. It's hard to believe. Sarah and I have been here. It was a month yesterday that we started quarantining ourselves, and so it's been okay. I have one big cut over my eye, and I got a little black eye that's healing nicely, and of course I got this bruise, big bruise on my back, but you can't see it when I'm wearing a shirt. Okay, let's move on here, and we'll take a look at something, folks. let's do something where we can. That's true. You're absolutely right, Marshall. Hold on one second here. Let's take a look at Christmas Day, boys and girls. There's a chart out here that's really got my interest. I'll tell you. You talk about a chart that's acting bullish. Folks, take a look at it. This is a 4-hour chart on silver going back to the 18th of March. We had a big run where the market, you remember that 18th of March down there, that was a 1.27 expansion on the long-term weekly chart that came off of the 1975 78% retracement. You notice that it hit it on the 18th, tried to test it on the 19th, and then had a $2.40 rally up to $15 an ounce. And since the 26th of March, it's been trying to get down to the 382 retracement, which would be down $1.20 at the 1380 level. We're trading around 1410 right now. Folks, that is a bullish chart. They're beating the heck out of gold. I mean, gold has done exactly. We went down and hit that 382, and then once it failed, this was one that was really interesting, because if you follow gold real closely like we do on the 24/7 service, we were buying that gold yesterday at 1608. It rallied up to 1627. And, we said, be really careful in here to make sure you have your stop at break even. And, of course, you see, once it went through there, it broke down really hard, rallied back one more time to 1610, which was a perfect 38% retracement from point C. And, folks, it looks to me like we're heading to 1520 in the gold. And that's going to be where the pedal meets the metal, and all the boys want to come in and bring their toys into the crib and see if it's going to work, because that's going to be the one that's interesting. Maybe it doesn't reach there. Maybe the low, that 1581 last night, which was the first ABCD correction, is going to be the one that means anything. But right now, I'm really surprised that silver cannot get to, that 382 retracement, given the fact that gold has been, quite weak. Now, the open interest in the gold and silver is just it's just basically fat or increasing slightly, not very much going on there. So I think it's very important that we want to be looking at. Dissolution is the word for the gold contract. I don't know what that means, Dennis, but who knows? We'll see. We'll do one thing at a time. All I know is, folks, I've had gold coins for a long time, and they've always treated me well. I still have customers at Drexel that still have the original Cougarans and maple leafs and Mexican pesos that we used to buy. And then we bought that. There was one Austrian. What was it? Austrian? Yeah, the Austrian krona was a really nice one too. Another beautiful coin, and still have a couple of those. But anyway, those have held up extremely well through thick or thin, up and down. They seem to be. There's a little sign on the refrigerator here. It's he who owns the golds makes the rules. Well, that used to be the case, but not anymore. People ask me all the time, what's going on with the Federal Reserve, folks. I have no idea how that stuff works. We have Shane Smolian on here that works pretty good. Larry Williams, evidently, I haven't been able to watch it. I've got the link for it, but he basically has done a webinar on that. I would certainly suggest you go in and take a look at it. Marshall, if you'd be kind enough to post that link again for Larry Williams's webinar, I think that would be a really good thing for the people to watch if they're interested in it. I'm interested in it because Larry happens to be a very dear friend, and he does really great stuff. And, a lot of people, not a lot, but there are a few people that don't like him. A lot of it because he comes off. He is so humble that it's just, it's just amazing. And he's always been that way, folks, opposed to what I was earlier. But he's always been relatively humble and a super fellow. Okay, let's. Question someone's asking is about the astro things that are coming up that Tim Boast talked about yesterday, folks. That's Uranian astrology. I know so very little about it. One other thing we might be able to do is hopefully maybe tomorrow we'll get a combination of either tomorrow or Friday. Let's do it tomorrow if we can. We'll get Arch Crawford is going to be our guest, and Norm Winsky on Friday. I'll try to get Bill Meridian to come on. I know he's in seclusion there in New Jersey because he got hung up here before he could get back to Austria. So he's at his house there in New Jersey, so maybe he'll have time to talk to us about it and this incredible volatility that we've got going on here in the market. So I think that'll be something that could be interesting to look at. We're going to have a break when we come up here, but we want to take a look at another one that is at the very, very interesting time here, and that is the hogs. And I'm not issuing a buy point on these. I'm just saying that we're getting pretty close to what we think could be a buy point in these hogs. But we'll cover that when we get back from the break. So we got to pay a few bills here for Tom and Tommy, and then we'll start up in here just a few seconds after the music starts, and we will go on to the break. And then when we come back, we'll talk about the little piggies. 877-927-6648 if you have any questions.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to talk about the little piggies here. You notice we've had this huge drop, all because of what's going on with the things and going on with the virus, of course. There's going to be a bottom here in hogs eventually. Now, I'm bringing this to you as an alert. The reason why is even with the negative news yesterday, the hogs didn't collapse. They made a slightly lower low, so they're down in an area where it could be a significant bottom. The world is still going to eat food, whether some people will eat more than others, I'm sure, but pay attention. Another one that's on our watch list, of course, is this one right here, which is the July corn. I want to bring this up to your attention here. And remember, this is all has nothing to do. Thank you, Marshall, for putting that link in. I really appreciate that. You'll take a look here. You'll see the July corn is in here. We're making the big ABC down here. We're below the 1.618 expansion, but that's to be expected given the fact of the down move. You can see the ABCD pattern from February into early March, and then where we are now, that's completed down here. So as long as as long as the July corn can stay above 336, it's got a really good chance to be a low risk trade. If you'll be able to be a farmer, we'll have to wait and see. Well, I've seen corn, but when I started trading corn, way back in when Hector was a pup and Moses and I were in school together, corn would trade in a 5-cent trading range for the whole week. This was like from $1.25 to $1.30 to, or 120 to 130. It would be there for weeks and weeks and weeks. This was during the late 60s and early 70s. And then in 72, when the Russian grain robbery came in, corn finally took off and it got up to $5 a bushel, I believe in 73 or 74. And then, of course, they had the thing a few years ago where it got up to $9, but we'll see those again, but probably not in this old cowboy's lifetime. We'll take a look at it. I think that, folks, if I had to put my finger on anything that looks really interesting to me, and I do watch these charts quite a bit, it's this chart right here. Pay close attention to this, because if this silver market is real, it's going to get down to about $13.75 per ounce. You don't have to risk more than about 20 cents there, and that's where I would say this might be a good one. So we'll look. Now, as you can see in the gold market, it's dropping again. I wanted to bring this to your attention because there's something very interesting going on in gold today from a perspective of timing that we look at occasionally. And you'll be able to see it here. The 24/7 people see this occasionally. You'll notice that the red line is the artificial intelligence line. It looks like there's going to be a bottom between 10:30 and 12 o'clock. That could be a double bottom. Now, if that's making a double bottom and nearly perfect, that is a very, very low risk opportunity in the gold. Now, remember, we're looking at a possibility of the longer-term cycle in gold coming in at 15.55. Now, that could easily make that today. That's only $29 away from where we are right now. And you'll notice here, let's just get this up here, 25. Oh, no, it's more than that. That's from 85 to 20. That's 65. That would be one heck of it. Boy, that would be bargain city if you got down here. Let's take a look at this one, and we'll be able to see it. You'll see here that, because, see, right now we're at 1585. We're going to take out this 1580. The 61% retracement is going to come in at 1550. So if that's another really important one. So if it doesn't, and you don't have to risk a lot on gold here. Remember, they've raised the margin on gold and the S&P and all these others. So you can trade it for $5 an ounce, which isn't too much when you consider that it's a $150,000 contract. So keep a look at that. So someone is saying that the hogs are locked limit down today. They are? Oh, wow. There, that means you're going to have better buying opportunities down the road again. Mr. Z, is that true? The hogs are going to be limit down? Yep, it certainly looks like it, doesn't it? Woo! Oh-wee. There you go. Oh, Schwab, when I see that Schwab, boy, that brings back a lot of memories. I don't know about the Charles Schwab. I know that, the brokerage, but Oh dear, I'll tell you, when in Los Angeles, there in the Pacific Palisades, there was a Schwab's Pharmacy there at the farm there, and that's where my friend Jay Cross lived, and we would go there and have breakfast. Well, that happened to be the hangout of none other than the voice of the Los Angeles Dodgers, Vin Scully, and later on I would have Wes Parker and several other Dodgers as my customers. So I got to know Vinny, and Vinny's very dear friend, and the gentleman that stood up for him in his second marriage, Jerry West, Mr. Clutch from the Los Angeles Lakers. They were there all the time, and the owner of that pharmacy happened to be a member or had gone to Temple University in Philadelphia, which it was started basically by Eli Lilly himself. And since I worked with Lilly, this guy was from Indiana, and we became friends, and it was really great going and get a milkshake and a hamburger, and you see all these movie stars in there. I saw Julie Andrews so much, I thought she was related to me. She was there so much. And also Shirley MacLaine was there quite a bit. But I was there basically to visit my good friend Jay, who lived across the street from none other than Rocky himself, Sylvester Stallone. And anyway, those were back in the old days when I was impressionable, and I still am, I guess. Who knows? Anyway, keep an eye on that silver, folks. That's the one that we got to pay close attention to, and you can use that SLV, that ETF for silver, which is a very good one, to look at. So sort of pay attention to that. But watch the gold today. We'll review this tomorrow just to see if it worked or not, just for the heck of it. The natural gas, I really haven't had a chance to look at it, Tucker, and that's only because I've been doing so many other things. I just really haven't had a chance to look at it. I still think it's going to be okay, but you folks, you see what we're doing now. We're running into panic situations in some of these things where some of these people that are producers are probably, they're not going to make it. And so they're dumping prices at, really, really small, giveaway prices. And that's it. In fact, the fact is there was a thing on the internet or email someone sent me about a conspiracy theory that this was a way for the government to take over everything. Now, I don't believe that. I mean, we're in capitalistic, we're not in Venezuela or, Cuba or anything like that. I don't think we're like that. I think we just got hit with this virus, and we're going to get through it. And hey, frankly, I'm like what Jim Grant said yesterday. I think the cure is worse than the disease. If I had a choice between the country breaking down capitalism or fighting this thing and just going in and getting immune by being exposed to it, I think I would go that direction. It's like a war. I don't think no one's going to argue the fact that we're not in a war with an unseen virus, where it came from. There's all kinds of things about, biowarfare. I don't believe any of that either, but we're fighting through it the best we can, and that's all we can do. So you got to live every day in an attitude of gratitude, and may God bless.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in a tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we had a request to take a look at the bonds. I posted the hourly chart. You can see it over the past several days, going more than a couple weeks. Anyway, you'll notice that 61% retracement comes up there at that 182 area, which is pretty important. And the next chart that I've posted is the 4-minute chart, because you can trade bonds, and boy, they have good swings. I mean, they move from 181, down to 180, $1,500. They move up $2,000 to 182, down another $1,000 to the perfect 61% retracement there at 181.70, and that will give us a ABCD pattern up at the 1.61 expansion at 182.18, and that will take out the highs at the 61% retracement that came in at 182.16 perfectly just a couple days ago. Now, if it doesn't go screaming above that, that's going to be a sign that that's major resistance, so you can sell bonds in that area of 182.18, but you have to be very careful because they could easily go exploding above that area, and you don't want to do that. You like to see them get there quietly, so you've got a doji or something like that to tell you that, yes, there is some selling coming in. You like to go up there and see them stay there for about, this is a 4-minute bars, I'd like to see it stay there for about a half an hour, just absorbing any selling that's up there. That would give you a really good chance and a very good low-risk trading opportunity, because then you can put your stop in at, say, 182.26, not risking more than 7 or 8 ticks on this, and that would make it a lot easier. So we'll be able to. We've got a potential caller coming in now. Please show us my. They're asking me to show the NASDAQ. Okay, I'll do the NASDAQ for you, Mr. Z. Don't trade that puppy. That's the pork bellies of the stock indices. It's a little wild, but we'll take a quick look at it here to see if we can come up with it without too much trouble. And it's got to be here somewhere. See, I don't trade it enough. I don't even have it on my watch list or anything anymore. I've got it here. I know that, but where is the darn thing? Shut the front door and raise the rent. Well, it's got to be up near the top then. If it's not near the bottom, give me a second, folks. There it is. There we go. All right, folks, we'll look at the shorter term first. We'll look at the 30-minute. Okay, that's easy enough to do. Okay, hold on just a second here. Boy, you're going to see a lot of numbers, folks. I hate to. Well, I'm going to leave them in there just to show you. This is one of the things I don't follow very often. because it's basically 25 stocks run this whole darn thing, so that's really not fair. Okay, here is the NASDAQ. We're going to be looking at it here on a 30-minute chart. You notice that it made a 59% retracement of that high. That came very, very close to the exact 61% retracement. Missed it by about looks like about 12 points, and now we're coming down, and you can see where we are. We're we're right at a 38% retracement of that low. So if this is going to be a bull market, it could hold right here where we're looking at it this morning at that 175.25. So that's something that you might want to watch, because it could be very interesting here. That 170, that 75. The low today at 75.20 was a 382 retracement of that low. So that could be a very, very interesting spot. I don't know if it's going to do that or not, but we'll have to wait and see. Now, we'll take a look at it on the longer term daily here, and we'll just get it up so we can see it here. This is a question where we've actually, give me a second, Mr. Z. I'm trying to do two things at once here. And again, you'll see here, yesterday we actually took out the highs of the last few days. That was due to a couple of stocks, but it didn't go anywhere. And this is the problem with this darn thing, Z, is that you get a couple of stocks in there and they affect the darn thing. You notice how yesterday the NASDAQ took out those highs substantially out of the last 3 days? We didn't do that in the S&P, and we certainly didn't do it in the Dow Jones. Those were lower highs. So that's the real market. The NASDAQ, you've got two stocks in the NASDAQ that account for 25%. That's Microsoft and Apple. So, and they're cap weighted. So that's why you got to be very, very careful with this one. And the margin on it is. I know you have monster moves, but this business is not about how much you make; it's how much you don't lose. So keep that in mind. But anyway, that's what the NASDAQ is looking at. Now we're getting the bonds starting to move up. We're now trading at 82.05. We've got about another 12 to 14 pips to get up there to see if it's going to make it, and then we will see if it's going to do its thing. We'll do one thing at a time, and that'll tell us pretty much where we are. Okay, now we'll move on. Another question someone's asking, and that is about the soybeans. Soybeans meal has had a very strong run because the protein became very, very valuable during this time, and we had a big run in the soybean meal. The soybean meal moved a little bit, moved about $1,000, but the soybean meal moved just about $2,500, so it was in more value, at least in demand, than at that time. So, but now it's starting to go back together. And the wheat market has been, trugging along. It's been quite strong, as we pointed out several times. I better show that Gartley, because that's an important one that came up right in the middle of all this crisis. You're looking at the whole world falling apart. And when you start to see some of these things doing what they're doing, it really makes you a believer in these patterns. Because you can see here, this was right in the middle of last month, right around the St. Patrick's Day. We had a 3 drive to a bottom pattern, a 78% retracement, and you can see that we went from 495 to 585. That's a $4,000 move in 8 trading days. So we're having some big moves in some of these things, and we will have. There's going to be some great opportunities coming through all of this. So we've got to make sure that we're doing these things, that you get ready to be able to hold on together. So that's it. 877-927-6648. Al says there's one line open, so if you want to call, this is your chance. And we'll move on to the next one here, and that was about someone asked. It's about the sugar. I haven't updated it, but that level that I think we got down to that 1060 level one more time, and I believe the target on wheat on the pullback would be the 382, Marshall, and that would be the 550 level. If you're looking for that, that's what I would be watching. Now, the $64 question is, and Ruby can answer this, is if we did hold that 1060 level in the sugar, very, very important that we held that. I'm not following sugar, so I don't really know. Walmart was the only stock that made a new high during this run up. so it's holding well, and it's one of the few places that has toilet paper. In fact, someone sent me one of the lots of jokes, of course, on the internet about the virus, and it was about a guy that he was stopped, a drug dealer, and they had the drug enforcement, and his contraband was rolls of toilet paper. And the captions were a little bit off color, so I didn't post it into the room today, but it was quite funny. And if you get a chance to see the interview with Joe Biden with the shotgun, oh, wow. And that is the funniest. I mean, you got to watch the whole thing. It's about 2 minutes, but it's really, really funny. All right, we'll take a break. 877-927-6648. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, one of the things you want to try to remember when the market takes bad news and that reacts very strongly, that's usually something very important. Now, we've seen this happen over the last 6 trading days where we were hit last week ago Sunday, last Sunday actually, and when the market really started to explode out of there, you'll see that it's had a heck of a rally up to the 382 level. We're going to see this in other things, but watch sort of how that's happening. We're seeing a little bit of that today in the British pound. It's trading up here at 124.20. And of course, their ratings, the Fitch rating service downgraded the UK debt from AAA to AA, and yet the market reacted a little bit and then came back and tested that same area. So it's quite important to keep that distinction as we look at some of these things. Remember, there's a lot of fake news out there, folks, and that comes from every single source that you can possibly imagine. That's why I try to stay away from it the best I can. Sometimes I do a better job than others, but it's not a good thing, to look at the news if you're a technician, because the charts are there. If prices are going up, there's more buyers. If prices are going up, there's more sellers. Concentrate on what you're risking, not how much you're making, and those are the things that will get you to the promised land. Try to keep a very, very positive attitude. I know it's hard with all the stuff that's going on out there, but one of the things, read things like Mark Douglas's book, Trading in the Zone, and another one that is just, to me, indispensable if you're a trader, and that is Reminiscences of a Stock Operator by Edwin Lefevre. It's a story of Jesse Livermore. You can live through the things we're going through now through his eyes, because he lived through all of those things and ended up, being a legend. And of course, they talk about him dying in bankruptcy, but folks, he had a huge trust fund and an estate there in Santa Barbara that's still there. I don't know if it's still in the family or not, but he was still wealthy when he passed away. He shot himself at the Roosevelt Hotel, and mainly because he was in love with a 19-year-old dancer in the Follies, and didn't work out the way he wanted, so he decided to end his life. Well, it's always sad to hear anything like that. I met the guy that wrote the book, Richard Schweitzer, I think was his name, was a friend of Ed Dobson, who was a friend of the family and knew Livermore personally, and I got to visit with him for several hours. He came to visit me here in Tucson. So live every day in an attitude of gratitude, and may God bless.